Değerli katılımcılarımız, Fizik Ötesi Finans başlıklı oturumda uygulama tabanlı bankaların geleneksel bankaları dönüşüme zorlaması, finansal kurumları ve teknoloji şirketlerini birlikte çalışmaya iten uygulamalar ve bunların geleceğe yansımaları ele alınacak. Oturumu yönetmek üzere konuşmacılarımız buradaysa, KPMG Bilgi Sistemleri Risk Yönetimi Bölüm Başkanı ve şirket ortağı Sayın Sinem Cantürk'ü davet ediyoruz. Ve panel konuşmacılarımız, Promaterial Dijital Danışmanlık Uzmanı Sayın Marty Scoop, Orange Business Service Middle East Afrika Bölge Direktörü Sayın Peter Zelstra, Türkiye İş Bankası Kurumsal Mimari Bölüm Müdürü Sayın Sezgin Lüle. Keyifli oturumlar diliyoruz.
Hello everyone, good afternoon. I think it's been a very long day for everybody. Thank you for joining us here in this panel. I'd like to represent my panelists again to you, make a little introduction again. I have Martin Scoop here with me from Prometia. He is the Digital Advisory Specialist. Also, I have here Peter Zylstra from Orange Business Services. He is the Regional Director for Digital Transformation. And we have Sezgin Lüle from İş Bankası. He is the Head of Enterprise Architecture. Before starting off the panel and before starting to ask my questions to my valuable panelists, I just like to say some words or some sentences about the current financial services environment in Turkey and as well as globally. We know that in recent years, there has been a rapid development in the field of digitalization, especially in industrial manufacturing, retail sector, telecommunication area, consumer market, and of course, financial services area. However, the telecommunication and the financial services have reached higher level of digital maturity compared to other sectors. One of the most important criteria for the sectors with rising levels of digital maturity is laying out digital strategy and the establishment of digital corporate culture. According to KPMG's point of view, KPMG's approach, starting from this year, in the next 5 or 6 years, we expect the finance sector or the banking sector will face with two major issues or challenges. And these ones will be related with the customer expectations and customer experiences. The first challenge will be maintaining and expanding the market share. And the second one will be maintaining high-value customers and, of course, customer segmentations. So with this approach, frankly, we can say that the financial services sector is experiencing a big paradigm shift. When taken together with constantly changing customer expectations and preferences, emerging technologies such as artificial intelligence or machine learning or Internet of Things, IoT, and blockchain, of course, are reshaping the way in which financial institutions offer their products or offer their services. In this ever-changing environment, maintaining competitiveness is one of our most difficult tasks. Financial institutions are undertaking major transformative efforts, particularly in transition from complicated old technologies into more mobile operations. And while doing this transformation, we need to be in compliance with the local and global regulations, of course. So it is obvious that in the future, the financial institutions will not be the only ones in the market. So as a result, finally, before letting the stage to my panelists, I think we can all say that we need to find or we need to develop a roadmap to work together with fintech or startups, with banks, or with all the financial institutions together to go one step further. With this aspect, I like to raise my first question to Peter. How app-based banking is changing the traditional, changing the landscape for the traditional banking, and what are the latest developments globally?
Press this, right? Yeah, so as was introduced already, I'm from Orange Business Services, and obviously it's a great pleasure to be here in Istanbul. For those of you who might know it, that Orange launched its own app-based bank 12 months ago. So this is an interesting development, and I would say an illustration of the disruption that was mentioned earlier. This was launched 12 months ago, and there are now, this week there was a press release, 200,000 customers now. This does not sound impressive, but within 12 months gaining 200,000 customers without having any branches, only running a digital platform, obviously that is quite an interesting situation, which brings us into a new dynamics with the bank. So the app-based banking is here. I think Orange is the first one globally as a telco to launch this bank. If I look at, for example, a little bit around the world, I'm based in Dubai. I do a lot of work with African banks, and I think that's a good illustration of the situation. Why? We have about, within the coming years, we have about 100% penetration of mobile devices in Africa. From Cairo till Cape Town, we have now about 80%, but it's rapidly growing. It's moving from the cheaper feature phones that we find to, let's say, the more, not nice to use this word, but the cheaper smartphones. But they will allow applications. And this is a big thing happening right now while we speak in Africa. Whereas this 100% penetration we see in Africa, we see only varying 10 till 30% bank accounts. I mean, a country like Egypt, for example, we have about 14% of the population has a bank account. There are about 100 million people. There is estimated to be between 45 and 50 million people, average age between 17 and 40, who do not have a bank account. When they start their journey, they start with mobile wallets. Mm-hmm. Then they migrate to, when they get more progressive and they become part of this financial inclusion, they move to, from mobile wallets, they move to microloans, microservices, microinsurance. So this is a good example, I would say, of not so very far away from Istanbul. Cairo, what is it, a couple of hours flight?
Yes.
Where you can already see happening. So the digital banking is here. Mobile will be the prime channel.
Exactly.
In Europe, I gave the illustration of Orange Bank as one of the first telcos to launch a digital bank, and this is possible because obviously Orange has mobile branches from the mobile operator. Yeah. It has all the labs to support with the AI, artificial intelligence. Mm-hmm. So this is an interesting development. We will talk, I believe, about PSD2 a little bit later on.
Yes, we
but
have that
not
question.
So far away from here. Like I said, in Africa, there is a massive, and we talk about more than 1 billion people who are anxiously awaiting to start their journey with a mobile app.
Perfect. Perfect. Thank you. Thank you, Peter. Maybe I can repeat the same question to Sezgin Bey. What do you think about developments about the app-based applications in Turkey, considering the banking environment?
Of course. From a traditional bank perspective, of course, there is a challenge here, you know. As the drivers behind this, you know, app-based banking is mainly driven by this open banking platforms, you know, a paradigm shift towards platform companies. We see that the abundance of data, technology, together with some regulatory forces are actually shaping the industry. But this is more relevant to the European case so far. We expect in the Turkish regulation also some changes in this retrospective, in this perspective. However, we still have some time to enjoy that, you know. All these, you know, developments are putting some challenge on the traditional banks, because now it's not a question of whether the bank is going to be, the banking system is going to survive or not. Of course, you know, there will be still some need for risk intermediation, you know, from deposit to loans. These needs to be regulated through, these needs to be managed through regulated balance sheets. So there is this underlying banking proposition, value proposition will still be there. However, the question is whether banks will be disintermediated from their customers, or from the daily lives, daily routines of their customers. So that's the main challenge for the traditional banks. So the app-based banking is kind of proposing a new value proposition in that perspective, bringing together these different sources of data, trying to form different experiences, design different customer experiences. And what is important there is the scaling up those, new app-based banks, as my colleague here said, in very quick time is the main challenging point. However, this is also an opportunity for the traditional banks, like the banks in Turkey. The banks in Turkey are, the Turkish economy, those, people who you might already acknowledge that the digitization ratio, digitalization, the penetration in Turkey is, quite mature, I would say. So the adoption of such, progress in the traditional bank, if considered as a opportunity, would be possible. I believe banks, in the traditional banks should work on these, ecosystem building, where banking becomes like invisible in the customers of the daily lives of the customer, and of course, use some human augmentation through artificial intelligence in relationship management banking part of the equation. Okay, so bringing that together, building, fostering, and ensuring they also are in the place in this competition is the strategy that the traditional banks should follow. Of course, scaling is a big parameter here. And in Turkey, banks are actually, what Turkish banks are doing is that they are not actually currently building app-based banks because there's no environment for that. However, they are strengthening their penetration towards mobility, digital customer experiences, trying to own their own ecosystems, which is a bit tricky here because we know that the feature also requires collaboration in that perspective. Ecosystem, you cannot own the whole ecosystem of a customer. There needs to be a collaboration of these ecosystems, and banks are trying to just, doing their investments in this ecosystem building area. That's what I see in the current circumstances.
Okay. You already mentioned about disintermediation, so this was related with my second question, so thank you very much, so that I can just switch to my second question. This is one of my favorite topics, the concept of disintermediation. Martin, maybe we can start with you. Once the online financial advisors will come into place, what will happen to the intermediators through the financial sector? We know that the proliferation of online advisors does not solve the middleman problem. So can we introduce the concept of decentralized business models where trust will be provided through technology?
Thank you. I'm with Prometea, and we, for our clients, we help them design online financial advisory processes, as well as digitalization strategies for retail investment services in a more general sense. And we think that incumbents, by which we mean banks, asset managers, pension companies, are very well placed to compete in the online digital advisory space. And this is for a series of reasons, four that I can name for you here. Number one is economics. Number two is the depth of service. Number three is regulation. And finally, client base. So if we take each of those in turn, economics. So financial advisory is, when it's online at least, is a low fee business. We're talking about 0.3%. But the investment to start, to build such an advisor from scratch is significant. We're talking about acquisition, we're talking about custody, administration, operation. So how long does it take for a pure play digital advisor to break even? A long time, years, many years, maybe even 10. Maybe open APIs are able to diffuse some of the cost, lower the investment, but it'll nevertheless stay significant. And the business case for startups entering this market isn't so clear cut. While the incumbents, they have already the processes in place. Maybe they need to work a little bit on streamlining them and digitalizing them. But the fundamentals are there. And they have clients which perhaps are not using traditional channels, which can be migrated to an online service model and have that model become active straight away. So that's economics. The second issue is the depth of service. Now, the startup advisors generally tend to deal with ETFs only. Is that enough, even for retail investors? Even retail investors have complex needs. They have protection, investment, pensions, human capital, all these things that they need to think about. And it's not a simple picture that can just be dealt with a couple of ETFs and off you go. While the incumbents are used to dealing with complex catalogs, multiple product lines, and are able to cross-sell as well between them in terms of insurance, pensions, investment services. Third is regulation. So an online advisor cannot be something that's second-rate. You still have to make sure that you protect the investor. Maybe you even have to protect him or her even more carefully because it's a self-service model. And you have to be compliant with the applicable regulation. Incumbents have a lot of experience in dealing with regulators, and they also have been providing these services across traditional channels for a while. They're used to dealing with regulators and the processes which ensure compliance. And finally, last but not least, is the client base. For a new entrant to acquire clients which trust the new intermediary, it's non-trivial, and this is a scale business. You need a lot of clients to even start thinking about breaking even. And while incumbents, the banks have lots of clients already. It's a matter of migrating them to the new service models online. And these clients already trust the bank with their money. So it's a much less of an uphill struggle for the incumbents. So perhaps in Turkey, by incumbents, I think it would be best understood as a combination of asset managers, pension companies, and banks, given the division of services across those three. So the idea, I suppose, would be that through cooperation, the banks who have a lot of retail clients drive those clients to the asset managers, who then provide the digital services and cross-sell with the bank's products. That's the idea. So I think that digital advisory is certainly an opportunity for the incumbents. And in fact, if you look at the new entrants into the field, Wealthfront, Betterment, Nutmeg, in the UK and the States, they're having a hard time. The funds, the assets that they manage are a drop in the ocean, less than 1% of the overall market total. After 10 years, I think this started in 2008 in the States. And it doesn't look like they're breaking even yet. Some of the data is a bit sparse, but it's not a rosy picture at all. So a little bit of what's been happening is that these startups, these new entrants that have maybe set out with a vision of providing B2C services to retail clients are starting to sell their technology to the incumbents, in essence becoming B2B providers of technology. And for incumbents, this makes sense because they could put together a digital-only model to efficiently serve mass market clients or those who prefer to use online. And furthermore, they can use it to that same technology to support a hybrid model, which is now all the rage. Everybody's talking about hybrid, right? Which is a combination of online self-service, online collaboration and communication with relationship managers, and the traditional face-to-face, where the client chooses how to interact with the service provider and when. So it's certainly an interesting picture, and I think the incumbents have a great opportunity here. Furthermore, the processes that underlie online advisory, which are streamlining existing processes, automating them, and governing them. Okay, and the same sort of end process, the streamlined, automated, governed process can be also applied to the traditional channels in the form of platforms for advisors who can then also benefit from lower cost to serve. They benefit from insured compliance, and they benefit from, the incumbent benefits from more centralized commercial control over their distribution network. In the end, whether it's online or traditional, doesn't make a massive difference in that respect.
Thank you. Thank you, Martin. Maybe we can move to another topic, and we can continue with Peter about robo-advisory. How robo-advisory will transform the customer experience? Are there any behavioral or cultural barriers for customer acceptance? And do we see any success stories globally? If you can share your practice with us, global experience with us, we appreciate to hear them.
So I'd like to start with an analogy of something we see in another industry, the airline industry. Because 15 years ago, probably no one in this room would have bought a low-cost airline ticket. However, fast forward 15 years, what we see is that the majority of the seat capacity in Europe, Asia Pac, and anywhere else is gradually being dominated now by low-cost airlines. And they have a simple business model. It took them some time to get off, but IT-wise, it's not as complicated perhaps as we see with the full-service carriers. And I see this painting, this picture, I see this in the banks as well. Banks are very much protected by the regulator. Banks have a very complex set of IT platforms in-house, probably carefully nurtured after a period of 20, maybe even 30 years. And they do not have this agility that you can move very rapidly. And this is one of the things that my colleague mentioned about being able to become disintermediated, because there are the smaller players in the market, like some of these robo-advisory companies that Martin also referred to. They might not make their numbers today, but I think what you see is the reason why we occasionally buy a low-cost airline ticket is for the costs. And if you look at a business model with near zero marginal costs, and this is key for the platform economies, what the Facebooks and the Googles and the Alibabas have taught us, is if you can offer a service in the B2C market with near zero marginal costs, you're in business. You're going to scale and you're going to grow. So what these robo-advisories do is they take a lot of the expensive overhead personal costs, staff costs from the banks. They have IT platforms which can rapidly scale compared to the users, different demands. And they can offer it at a much quicker and much higher profit margin. So I think if I look, your question is about cultural differences. No, I don't see any cultural differences. I was in China 2 months ago. I could not pay cash in most of the shops. I had to show my application with WeChat, and I had to get the QR code up. I mean, we are going into a commercialization of, let's say, IT, and it's the users, the younger generation, that is driving this. And that means the cultural differences I see, and there is no difference in WhatsApp, using WhatsApp to share money. This is going to happen in India. This is already piloting. So no cultural differences where I come from. I see that as long as the economic makes sense, it's a better service, it's cheaper, we're going to use it. And that means robo-advisory or low-cost airlines. For me, it's the same principle.
Thank you, Peter. Sezgin Bey, what do you think about robo-advisory? What are İşbank's plans about robo-advisory? Because I know that you already have some, not plans, but projects.
Yes. Well, actually, in our investment sphere, we are just carrying out some robo-advisory projects, just from the portfolio management perspective, to make efficient asset allocation decisions in an automatical way, so that actually we can leverage the customer expectation of their risk profile, return expectations in a more automatical manner. But that's like the short-term view. I would actually like to take the question of robo-advisory from the artificial intelligence point of view, because you ask whether there are some barriers, cultural barriers of being accepted. That artificial intelligence is a hype. Most of those technology companies, financial conglomerates. Even in our case, we are just running an artificial intelligence program almost a year, trying to set up these, models on our huge, big data lakes, you would say, trying to find meaning, to discover patterns around customer behavior, trying to sort of create a digital twin around the customer, so that we can improve their customer experience with the bank. However, from a business model perspective, we see artificial intelligence in the traditional banking sector is only going to be going to augment the human factor. I mean, our employees. What we see, it's not artificial intelligence is not going to replace the current workforce, because for those business segments, we believe advisory, human relationship management through certain segments will prevail, and in that part, artificial intelligence will be actually assisting our employees for just better decisions, better value propositions, and enhance the customer experience. We believe that, for example, in 5 years' times, a bank advisor in the branch or over the phone, or remote relationship manager who is not leveraging artificial intelligence technologies, that practice would be unethical. That's what we believe, because there are lots of cases that customer would benefit by leveraging different sources of data in that perspective. So we believe that the cultural differences, social differences will still be provided by the human perspective in certain parts of the business model. Of course, there are you know, the traditional banking business model is going to be you know, divided into different parts, as we talked about. When we are talking about platform business models, you don't have an, you know, relationship manager who's going to use AI here. You know, you just need to connect your API system to those ecosystems. You need to be, as a bank, invisible just to fulfill that moment of truth of the customer, and, you know, kind of serve that experience in an invisible way. And, you know, my colleague here mentioned about business to business, you know, scale technologies that benefit economies of scale, and those parts actually are mainly machine-led without human interaction. And you could either use your current customer base, or, you know, could easily ramp up your customer network in a short period of time. What I mean AI, in terms of cultural barriers, it's not easy for the client to just directly actually engage with the artificial intelligence. We believe it will still need to be assisting our employees, providing more human augmentation for providing more customer excellence. That's our perspective.
It's good news for us, so there will be a need every time for a human being.
In certain areas, though, you know. Right.
My fourth question is related with PSD2 and the overall trend, because there is a trend. Oh, sorry. Okay, let me start it from the beginning. My fourth question is related with PSD2 and the upcoming regulations, let's say, because the overall trend toward open data and API will force the financial institutions to develop closer relationships or to assess different partnership or co-working methods with entrepreneurs. So how do you see the future of technology players or startups or the financial institutions, giant financial institutions? We can start with Martin and go on like this.
Thank you. Well, the line is certainly being blurred, right? We have a prime example here with the Orange Bank, and it works the other way around as well. Banks are opening up their core banking systems and other services to third parties, to startups. They're even becoming competitors to companies like mine. So certainly. Certainly, there is a lot of cross-pollination happening, and I think we heard in the initial session that you know, pretty soon there will be little distinction between technology companies and banks. I don't know if that's all the way true, but it's certainly the line is blurred and becoming ever more so. As it stands, banks are great collectors of information. Right? We all know transaction data. Every time we swipe the card, every time we make a transfer, it's noted somewhere deep down within the bowels of Sezgin's systems. So, but I don't, and it's being used. It's being used in various ways. This data. Even my company has a specific business line dedicated to using this data. For example, we look at transactions to identify the point in the life cycle of a particular customer and estimate the associated needs, financial needs of that customer at that life stage, to then feed into CRM systems in order to make, in essence, better campaigns. However, I haven't seen yet something really killer customer-facing service, something really new based on this data, or really some massive improvement on the back end either. It's little incremental steps. So there's still a lot of work to be done. And with PSD2 and open data in general, what is happening is that the banks are losing the competitive advantage of having data, this data, while others don't. Okay? So now, whether new entrants into the field will be able to exploit this newfound openness really depends on their ability to innovate new service models, new services, but also to gain the customer's trust. And here we go back again to the idea of trust and an existing client base. New entrants may not necessarily have a client base as large and varied as banks. So I think also here the incumbents have an advantage now. Whether it will last, we'll see. In Prometea, we are thinking of different types of services to build on top of open data. For example, global account aggregation, where for clients you're able to collect their entire financial situation from across different intermediaries, their pensions, their assets, liabilities, their transactions, in order to build models of analytical models and provide advisory services which cover the entire situation of the client, not just a partial one. Because a lot of intermediaries now, when they provide advisory, they're working with either a partial picture or something that they heard from the client. This is a different ballgame. Whether such global account aggregation services, and this is just an example, are built by incumbents or by new entrants, well, that remains to be seen. I think that for now, incumbents have an advantage, having the data already in-house and the client base. One more thing maybe, that the incumbents which are best placed to take advantage of the open data, the push towards open data, are the ones that philosophically maybe see technology as a competitive advantage, and a differentiating factor. And not, from yesterday, for a long time. These are the intermediaries that tend to build systems in-house, very specific to what they think their clients' needs are, rather than perhaps buy solutions from the market. And I think these guys will be the ones best placed to take advantage of the transparency that's coming online, as their competitors are maybe a bit behind, and startups struggle for clients.
Thank you very much. We can continue with Peter.
Yes, thank you. I'd like to start with one example in Europe where the PSD framework is obviously implemented. And I always like the idea of YOLT. I'm not sure if anyone in the room knows YOLT. It's a Dutch example. I'm Dutch, so that gives it away. But it's actually ING UK, who has built a very, very attractive front-end application. Remember the point we made, disintermediation. And what they do is they allow you access, and this is what the regulatory framework supports, they allow you access to all your credit cards, bank accounts, and you name it. Now, this is just from a user point of view, and we mentioned that several times, customer experience is something everyone wants to have. I don't want to go to 6 different websites, key in 6 different passwords and username, and then somehow on a piece of paper find out that this is my total situation with my finances. So having one app that covers it all is obviously a very attractive proposition. This is the first phase, but the second phase is obviously what is very interesting. What happens if this application will actually negotiate because I want to buy a new car, I want to buy a new house? What happens if this app is automatically, with some APIs, negotiating with the likes of Bank or the likes of any other bank, the traditional retail banks? Then you suddenly find yourself in a bank in a totally different situation because you've lost that direct contact and you have a situation where you're actually on the receiving end and you have to offer better the offer of your competitor in order to stay in the game. So this is what PSD2 in Europe is forcing banks and banks to do. Now let's move a little bit out of Europe. Let's go to Asia-Pac. In Asia-Pac next week we have the Singapore Monetary Authority who is regulating what they call APIX. They will launch it. It means an API exchange. Because as you know, we do not have that regulatory framework in Asia-Pac, different countries, different monetary authorities. But Singapore wants to position itself as the fintech hub, so they've taken the lead and they say we're going to build a sandbox environment. We're going to make sure that the banks, it's very easy for the traditional banks to sign up for this because there is a genuine need to start exposing these APIs and start consuming these APIs. So despite the fact of a regulator pushing, like in the case of Europe, you see that the market itself is trying to use that technology to bring these banks into a common framework. And this will allow very interesting players in the market. For example, in Indonesia, you have this little app that 3-4 years ago they started. It's called Gojek. It's a simple app. I can book myself a motorbike transport from A to B. And these guys have grown so enormously over the last 2-3 years that they're now valued over $1 billion. Alibaba is pouring money into them, and they are now applying for an e-money license as well. So these are the future banks, so to speak, that are created by this new technology, and they definitely fill in a need. Like Yolt is having a need for us to have an integrated view on our finances. This also is creating a need for a platform that can help me with a lot of practical, but has a financial aspect. And this is an example of the Banco, the ecosystem my colleague mentioned. Now in Africa, there is no PSD2 framework, there's no regulatory framework, and this is cutthroat competition at the moment between the mobile money operators and the telcos. But what's interesting is that's where the fintechs actually are supporting the banks because they offer this last mile. They offer the potential and the possibility for the traditional retail banks to expand their services into geographical areas where there are no branches or into a market segment where they do not actually have any knowledge about, because KYC, being able to do a proper risk assessment. So this is an interesting play. Europe, very much, we have the PSD2 framework creating competition. Asia-Pac, where the market itself is regulating because they see a need. And Africa, where you see fintech stepping into the fact that the regulator is either non-existent or is 2-3 generations behind when it comes to creating a situation. And I've spoken with banks in Africa, part of them are my customers, and they say actually we're very happy this development of fintech stepping in front of us, because for one particular reason, they say, and this is a very simple statement, we can issue a loan of $1 million, but issuing a $1 million loans of $5 is that our IT systems or risk assessment systems, our whole mentality almost, or DNA of our bank is not capable, but the growth in the market is exactly in these $5 loans. So just a little tour around the world, so to speak.
Thank you very much for that global tour. Really, it was exciting. Maybe we can have some insight from Turkey.
Yeah, of course, of course. Well, when it comes to open banking, well, as I said, Turkey is still untouched territory in that respect. But, in our case, actually, I can talk in the perspective of İşbank that there is nothing wrong about open banking, actually. This sharing economy of APIs. The strategic perspective towards these, regulatory change is an opportunity for those, incumbent or traditional banks. If you treat this in this manner, there will be, benefits toward that. Because at the end of the day, what do the regulators want? PSD2, open banking, it's all about bringing transparency, bringing competition, value creation through in the financial industry. Why? Because we have this proliferation of technologies. All technologies are emerging towards, forcing different entities in the economy to collaborate. The paradigm of competitive advantage is that. because I believe it's the new era of collaboration advantage. Because if you actually kind of treat the situation of your data is the most precious data and the others do not have that, actually it's a lose-lose game. It's like a game theory. At the end of the day, if you combine those different data sources, you end up actually increasing the share of wallet, increasing the volume of the benefits here, So I think the bank should treat it this way. In Turkey, the banks are, in the last 2 or 3 years, it started with this, agile culture, okay? These fintechs emerging. Of course, you might be all aware that the gig economy is also a kind of emerging, which is at its infancy situation in Turkey. Young, talent trying to, build their own startups. They do not want to actually, how should I say, have a lifelong employment for certain companies, for corporates. They want to work for a certain period of time for themselves. So this kind of independence, freedom, the gig economy, the gigs, are actually providing this fintech or startup ecosystem. And in Turkey, we have been doing some experimentation with them. What we have been, all the Turkish banks, not İşbank only, through incubation centers, through hackathons, through these, agile, collaborative schemes, we started to build some API platforms, which is the initial stage, getting ready to this, open banking platform. Currently, for example, in our case, we have this API platform open to all developers. So anyone, a fintech, who is pursuing to come up with a new app can use these banks' APIs, very simple APIs. Where is my ATM? Can I log into my bank? Can I, originate a consumer loan? Or that kind of APIs around to 70, 80 are already available in the system. And, this kind of readiness is actually shaping the industry towards collaborating with the fintechs. It's a huge opportunity because, as my dear colleague here said, the banks actually possessed legacy IT system. They are wired with those paradigms. Okay, you need to have an IMS, you need to have a mainframe, you need to just maintain this huge cost legacy. It's not easy for those incumbent talent to think out of the box. So these fresh talents, without being spoiled with these kind of legacy systems, they have these fresh ideas. And when you look to these collaborative mode, I see in the Turkish market through these startup support systems, the banks are kind of making some little investments. Also, there is this venture capital emerging in the Turkish market as well, as we see some initial steps of angel investors and constitutional investors again in the corporate venture capital sphere. So such kind of mechanisms are kind of wiring the ecosystem together. I believe there is no regulation in Turkey yet, but once that regulation will be released in Turkey, the sector, the traditional banks will be ready to cope with those app banks. I don't see in the future here an app bank with this maturity level is competing with this kind of ecosystem with the traditional banks, because this kind of understanding is shaping the industry to provide those customer-facing experience which are currently deemed to be unique to those fintechs or app banks in Europe. So the Turkish industry is getting ready for that moment. That's the summary I would like to make here.
Thank you very much. I totally agree with all of you, because we know that those kind of banks, let's say invisible banks, are coming, but it's not going to be easy for them to replace these kind of traditional bank environments. Last but not least, I have a question about the regulations, because I work at KPMG, so I'm very, very related with, as an IT auditor and an IT advisor, I'm very interested in regulations. So how do you see the role of regulations or regulators worldwide? As a disruptor or as an enabler for a harmonized global financial ecosystem? Again, this question goes for everyone.
You start with
I start with the banks. Well,
Sure.
well, I go first. Actually, I say it in both perspectives. It's both disruptor and it's both enabler. You know, it depends on how you treat the regulation. You know, as I just explained in the previous question. However, you know, if you actually, from a regulatory perspective, if it is very strict at the very beginning, it tends to show signals toward it's disrupting your business. For example, my dear friend here would talk about the Chinese experience. He talked that they totally jumped the plastic cards, the credit cards experience in China, that all people are using Alipay or different paying schemes with QR codes. No credit card business there. No Visa, MasterCard in China. Literally saying. So why did that happen? Because there was light regulation there. So actually government kind of paved the way for innovation by not really regulating it in a very harsh manner. So, but now they started, once they achieved this maturity level, now they are starting to regulate it because it has now become a significant part of the economy. We are talking about platform, technology firms who are actually, sitting on balance sheets of the huge Chinese banks here. They are actually gathering deposits and using the power of the bargaining power and getting high interest rates from the incumbent Chinese banks. So now it's time to regulate them. I believe the regulation should take a perspective by putting some regulatory sandbox. Okay, just making some room for innovation. For example, just a concrete example in Turkish case. That we have this anti-money laundering, the Financial Crime Act, that you need to be doing lots of due diligence through KYC. There is no problem with that. But when you look to the legislation, you have to do it face to face. And all the banks, in our case, we are actually onboarding 1 million customers a year. Every onboarding customer registry has to go through the branch, has to go to face to face. However, we don't have any digital onboarding in Turkey because it's not regulated there. So on the contrary, when you look to the statistics, most of the banks in Turkey are doing their 6 to 5% of transactions through branches. Everything is mobile. We are talking about 60% penetration of these big banks in Turkey. Every retail customer is doing 60% of their transaction through mobile here, but they need to go through the onboarding process in a very conventional way. So these kind of onboarding through digital, video onboarding, all these app-based banks, how do they onboard people? They just onboard online, but yet the regulation here does not actually allow the banks to do so. So I would just, my point is that just give some room for innovation in terms of regulated. When it becomes mature, then you can really strictly regulate it, because if you don't do that, then regulation becomes a disruptor rather than an enabler. That's my point of view. Thank you.
It's quite interesting to listen to you, because I hear the complaints from banks in Saudi Arabia and Dubai are literally exactly like you mentioned. We wish the regulator was a little bit more lenient, so we were allowed with digital
No regulators
onboarding.
in the room, I guess, so I
So
would come
that's-
up with a fine at the end of the session.
Yeah,
so.
but this is quite interesting, because at the same time where we see that the regulator in Abu Dhabi and in Dubai, as well as in Riyadh in Saudi, they have this, I would say, very restricted regime still, and they're opening the door very slowly. Sandboxes was mentioned, which I think is something that is absolutely necessary to allow the banks
To innovate.
to innovate, to force them and incentivize them perhaps. But at the same time, you see, if you Google Dubai and fintech, and they promote themselves as the global hub for everything that is the future. So this is a real dilemma for the regulator. I mean, if you look at remittances, for example, Saudi and Dubai are in the top 3 of global remittances worldwide. Now, the inherent costs that are associated with the paper onboarding and with the whole systems that you need to use and the regulatory checks and balances, they are enormous. So it's not like there's no business case, right? One of my key, and then I'll hand over to Martin, but the key thing I mostly ask some of my customers is, have you calculated the cost of doing nothing? Because we will come to the point that we can actually calculate, and I think this is a KMG exercise most likely, we can come to an exercise of calculating the cost of doing nothing, and this is the point where also the regulator needs to realize that not having a regulatory framework that incentivizes banks to actually move towards this journey, it will slice off a couple of percentage points on the GDP. Right, so
Very good point.
cost of doing nothing, if you ask me, needs to be much more the focus of discussions with the regulators.
Yeah, maybe I can finish with an example from Italy. MiFID in Italy was interpreted in a particularly strict sense compared to other European countries. One of the many results of this was actually a lot of innovation, technological innovation, to understand how to do business within a strict framework. And that actually, there was a lot of new stuff that came out that in part is being rolled out across Europe now with MiFID 2. So I don't think that that regulation is only an inhibitor or only a promoter. I think it's a much more complex relationship than that. And furthermore, all this innovation in Italy was local as well. It's the whole software ecosystem that was driving compliance. Since it was particular to Italy, it ended up being local. Is that good or bad? I don't know. It depends on which side of the fence you sit. I mean, it's certainly much more difficult. Italy's a much more difficult market for new entrants than some more open ones. On the other hand, Italian technology companies and even financial technology companies are more ready to go abroad, having worked in such a restrictive environment. So maybe I can end there.
Thank you, Martin. So if we say that we like to see Istanbul as a financial center, then honestly we can say that the regulatory agencies need to have a more innovation-friendly identity, I think, at the end. We have only 3 minutes, but maybe I can ask an open question to you, because as Sezgin Bey mentioned that we have one more topic to talk about, quantum computing. If anyone has to like to say something about quantum computing use cases, about their experience, or what are the developments in Turkey, please, you can use that last 2 minutes for computing.
Maybe I can take that question, from an architectural perspective. Well, quantum computing is the new hype again, It's just, becoming very popular. The current processing power of just computers makes possible, different AI models to run to produce, meaningful results, and that is because we have this, parallel processing power of graphical processing units, namely GPUs. And quantum computing is going to just exponentially, increase that computing power. That's the essence here, because the conventional computer is mainly, that everybody knows, it's doing calculation based on this deterministic structure, or 0 or 1. However, in a quantum state, one digit could be either 1 or 0. That kind of exponentially increases the computing possibilities. Where this could be used, there are different, problems, use cases, especially in the finance industry, where you need to model like sophisticated, real complex situation, like the financial market or portfolio analysis, all time changing dynamics. The current understanding of the AI modeling is not fit to come up with accurate results of that one. So, of course, derivative pricing, all that complex problems, that could be easily be run in the future through computing. However, the bad news is that it's an infancy stage, because we could resemble it back to the initial classical computers that used to operate in the 1950s or 60s, so we still have long journeys to go towards, for that. But I believe when we are talking about the singularity, I just saw it on the screen, it's in the middle of this circle over there. The singularity point definitely requires cloud computing for bringing this intelligence with vast majority of cloud computing capabilities to the service of human being. Thank you.
If I can say just 3 words, because we're running out of time, but I do believe that if we look at our economy 100 years ago, we were talking about the gold rush and we were talking about the oil rush. We still have the fossil fuels. I do believe the future economies will be the data rush, and any country, any organization that takes a head start in being able to get these data, obtain the data, and run analytics with all the technological innovation that my colleague mentioned, is generating a whole new revenue stream. And that that data rush concept, I think, is going to drive a lot of the economies over the coming years.
Thank you very much. We are now don't have any more time left, so thank you everyone for attending us here, and I like to thank my panelists, because it was a really delightful panel for me. I hope that you also enjoyed. Thank you for your insights. Thank you for sharing us your experiences. I'm so glad that Turkey is not so far away from the rest of the world. We are going in line, but also we are having the same difficulties and challenges as well. Thank you very much. Hope to see you next year.
Tüm konuşmacılarımıza teşekkür ediyoruz. Ve plaketlerini vermek üzere Yapı Kredi Yatırım Genel Müdür Yardımcısı Sayın Yılmaz Arısoy'u davet ediyoruz. Değerli katılımcılarınız, kongremize ilgi ve katılımlarınız için teşekkür ediyoruz. Yarın yine birbirinden değerli konuşmacı ve panel konularımızda sizleri bekliyor olacağız. İyi akşamlar.